going to start by summarizing the problems that are going on in the real estate market right now. There are quite a few for many people. Some people are absolutely killing it, but a lot of people are having a difficult time with some of the real challenges that are going on. And we're talking about real estate investors, but we're also talking about everyday people that have mortgages and jobs and families and challenges. And as a real estate investor, to be successful in these types of markets, you truly have to be a deal engineer and you really have to be a problem solver. We're going to talk about how to solve problems in a minute. But first, let's kind of set up, Patrick, these problems that are going on in the real estate market and how they're affecting people.
Well, it's an interesting time, isn't it? Because from our perspective, doing the research that we do and educating real estate investors and investors looking into the market, we're always looking at the housing market. We're looking at the economy. We're considering all the great things that are going on. But underneath the surface, there's a lot of challenges. We talk about CPI, the cost of inflation that people are facing, the rising interest rates. Well, what does that really mean? To us as investors, we're looking primarily and saying, well, how can I buy property for cash flow? And how can I do this or that? And rents are going up because the cost of living is in fact rising and the cost of housing is in fact rising. So got all that. We talk about it all the time. But underlying is really a problem that's starting to grow. And I think we're just at the tip of it and it's going to roll. It's going to be a big wave coming at us. And that is the challenges of, like you say, just everyday, ordinary individuals, JG, who are challenged. They got, rising costs because they took out a line of credit. They have mortgages that are renewing, that their payments are going up dramatically. They've got the cost of living in one province. They're saying, I got to get out of here. I got to go to a different province. Maybe they're going to go from Ontario to Alberta, BC to Alberta, Alberta to Saskatchewan, because they got to get to a place where they can afford. And here's the fundamental problem that's happening, because we're doing some research on the banking side of it. And that is,
drum roll, please.
People are running into, I cannot afford to hang on to this property anymore. This home, I got to get from underneath it. And this is where the challenge lies, JG. And as investors, if we can come in and solve those problems, guess what? Lots of opportunity, lots of win-win situations that we can create.
I think the question becomes, how do we solve those problems as real estate investors? We'll talk about the exact tactics and strategies in a minute on how to do that. But Patrick, we've got some great charts and some great visuals to share here. And CPI, Consumer Price Index, is a good example of it is definitely starting to come down, but it's not coming down equally in all different provinces, right? You and I often say on this show that real estate is regional. And as the Consumer Price Index comes back towards a new normal, love that tagline that seems to have stuck for many, many years. Now, I think it's going to stick around for a couple decades, by the way. But the new normal of what the Consumer Price Index is, it's coming differently at different provinces. For example, Ontario is down 5 points. CPI has only grown by 5.6%. Now, I want to just take a minute because a lot of people watching this show may not know this, Patrick. But when people say the Consumer Price Index is coming down and they're looking at a chart like this, what it's really saying, the truth of it is it's 5.6% higher than it was last year. And last year was 8.6% higher than the year before. So this 5.6, Patrick, is on top of the other 8.6. It's not like it's come down 5.6%. The growth and the acceleration of growth has slowed, but the overall Consumer Price Index is still up.
Well, you're exactly right. And on top of that, in this case, you're talking about Ontario, but it doesn't matter. CPI, up 5.6%. Well, that's an aggregate number. And what we have to look is behind the curtain of what makes up that CPI basket, if you will. And as we know, many of those numbers change and shift, and that's just kind of how the government does it. But what we do know about CPI is those things that we buy on a day-to-day basis are actually not going down. And for example, we have food prices that have gone up and continue to go up. And also, as part of CPI is shelter. And in that shelter, that many people don't know, is the cost of interest on the mortgages. That's part of it as well. So, it's an aggregate. And as much as some things have come down, many things have not come down at all. As a matter of fact, they've gone up.
You lead us right into another chart, Patrick. We have a great chart here. I believe it's by it's by RBC Economics here. And you can see how the affordability issues is really at a peak here in terms of ownership costs as a percentage of household income. It is as high as it's ever been on this chart back to 1985 or 1985. But there is a forecast that this is going to go down, and they're forecasting it to go down, Patrick, for the exact reason you talked about, because in RBC's mind, interest rates are at their peak and they're going to be coming down now. We're going to start coming down. As a result, affordability gets better because the cost of interest comes down. So this is a very interesting chart that RBC puts out, but not all the analysts are seeing it the same way. And in fact, in other charts we have to share, and then you can comment on both of this, Patrick, is speaking of analysts, the job market has just come out in January with 10 times more jobs created than the analysts predicted. It happened in December. It happened again in January. I'm starting to think these analysts got to be fired, Patrick.
You're fired.
Well, they have that room, that margin of error, because they stayed up front. It's just a forecast.
10x? Is 10x a good margin of error? I mean, I have a margin of error too, but come on, 10x?
I know, it is unbelievable, isn't it? And it's not the first time that they've been that wrong. I'm still waiting for some corrections to come in, but they have not come in. So how do they end up being that wrong? I have no idea. But the reality of it is, those are what the numbers are. That's good for us from a housing perspective as investors, of course. That increases the rental market. It keeps the demand high on the housing sector, which, given the lack of listings, that's going to keep prices elevated as well. But I don't want to go too far down that path just yet, JG, because when we go back to what we were talking about from the affordability part, RBC released that chart. It's a forecast of what they think bond yields are going to be and what long-term rates are going to be. So they're looking into 2024 before rates actually start to come back a little bit. They don't foresee rates rising in 2023. That's still debatable. We'll see what the Bank of Canada does. You and I have both agreed in the past, or at least I've agreed with myself, that Bank of Canada has made some epic errors. We're seeing what's happened, but what is happened is that they had that increase in rates, JG. It was rapid and it was severe. From 0.25 or whatever that number was to 4.25, 4.5, whatever the final number is these days. I'm just not coming to mind. But the point is, it was a rapid rise. It caught many people off guard. You and I know that. Lines of credits doubled and tripled. People are renewing mortgages that were at 2.25% and even 3% are now 5.25%. And then on top of that, you've got others that are facing the fact that they had a down payment, but because of their household income, it's not enough to qualify for a mortgage. So these are all challenges that are being faced by many just people with houses that exist. They've got too much debt. The debt loads are skyrocketing. They're at 185%, by the way, which I don't have a chart on, but it's 185% of what they're carrying for a debt load. It's crushing people because of the interest rates and, of course, the cost of living overall.
Now, one of the effects of this, Patrick, you just talked about, is how this is tightening up the rental demand. This is actually making rentals more popular than ever before. Shoot, we didn't have room for more people to want to rent. It was already tight enough as it is. But if you look at this chart I'm putting on the screen now, the rental market vacancy rate is at an all-time low since 2001. And again, that's just indicating the tightness. And that's for a variety of reasons, part of what we're talking about here today. But all of this kind of adds up to, Patrick, problems. And in this market, in a market like we're in right now, successful real estate investors must solve problems. If you're not solving problems, really not getting deals done. There's no silver bullets out there. There's no gold nuggets hanging around on the street where you're just going to put in a good offer and get it. You have to be able to solve problems to be able to grow a portfolio in this market. But I must say, Patrick, even though you have to use different tactics, which we'll talk about in a second, this is the best kind of market to grow a fantastic, resilient portfolio, because you have to be that much more creative. You have to be that much better than everybody else, and you have to be sophisticated in order to be successful in this type of market.
You nailed it. The level of sophistication has to come up. The level of knowledge and understanding what's going on in the market has to rise, because you have to be there to understand that in these markets, in this chaos, in this confusion and uncertainty, this is where the opportunities live for investors who are educated, who have that actual mindset, and I guess putting themselves in an environment, in a community that they can have these conversations to use tactics and strategies to solve problems. And JG, we can't stress enough that the problems are only just beginning. We're only just hearing about it. And we know it to be true because, again, we're seeing banks react. They're actually shifting their lending rules. They're extending amortizations. They're figuring out a way to not put people under pressure, which is awesome. But they're running into one fundamental problem, and that is people continue to run into problems. And this is where investors not only can be there to solve the problem, but the exit on the other side of it, if they want to be in a buy and hold strategy, is that the rental demand is still there, and or the demand for listings and sales is still there.
So if you're Patrick, if you're an investor and you want to be a sophisticated investor and you want to solve problems, in our world, you need 5 tools in your tool belt. If you imagine yourself with a tool belt around your waist, you need 5 tools in your tool belt. And what we're going to do now is kind of go through these 5 tools. And these are 5 essentially deal structures in order for you to help people solve problems. And Patrick, I'm actually actively using several of these right now, where I'm actually in the process of negotiating deals with people in order to help them get out from under these problems. So those 5 kind of tools in your tool belt, Patrick, and we'll go through and summarize each one. But the first one is an agreement for sale strategy. Very, very unique, very, very creative. We'll touch on that in a second. So agreement for sales, number 1. Number 2, vendor take back. Vendor takebacks is a way to finance a property, and we'll touch on that in just a minute. The third way is wholesaling. Wholesaling is a fantastic way for you to either purchase property at a great rate or be able to flow property through your hands and make some additional cash flow along the way in order to help somebody else solve the problem. So wholesaling is another great strategy. RTO, one of our fan favorites, Patrick. Rent to own agreements, or what's called leasing options, is another sophisticated investor strategy that we're going to touch on. And the last one, which we don't always talk about in these kind of tough times, because those 4 are kind of the primary 4 tools. But the other 5th one is just as important, and that is joint ventures. You know, these kinds of problems and challenges that people have run into open up the opportunity for a joint venture partnership conversation that otherwise wasn't there before. And if you're creative and if you have a way to structure deals, this is a great time to be doing joint ventures. And it's a great way for someone to grow and scale a portfolio during tough times like this. So Patrick, are you ready to dive deep into these 5 strategies?
Well, let's get to work. If you're interested in learning about investing in real estate the right way, look at our Real Estate Investing in Canada program. 15 steps to successfully investing in real estate. Thousands of real estate investors have learned the right way to invest in real estate following those 15 steps. You're absolutely going to love that program. Take a look, click on the link in the description below.
I hope you've enjoyed this episode. Please like and subscribe. And if you've enjoyed this, please share it with someone that you know, because it's going to be incredibly valuable to them. Also, we'd love to hear from you, so please comment below. If you want to see more stuff like this, click here. If you want to see the entire show, click there.